on business. I'm Ty Clark, and here are today's top stories. Trump's UK deal boosts markets but leaves SMEs in limbo. So President Trump announced a $5 billion trade agreement with the UK, easing tariffs on steel and car exports. While Wall Street responds positively, UK small businesses express concern over the deal's limited scope, and many tariffs remain, leaving them uncertain about future prospects, according to Business Insider and the Financial Times. I think the tariffs, although a great way to bring countries to the negotiation table, it is a monumental task to be negotiating with all countries, basically, that deal with the United States all at once. I think this is an important effort and needs to be done. It is, however, a little terrifying for those that make very small profit margins or living on the fringes. This can be life-altering and devastating to those companies and those families. So it's important not to play chicken with this and to get these negotiated as fast as possible. I would have wished for a more measured approach, work with our top, let's say 5 to 10 biggest partners that need to play more fair. The tariffs are all about fair trade and re-scoping that. What is fair and what does fairness mean? For a long, long time, decades, the U.S. has been cheated on quote-unquote fair trade by both our allies and our enemies. Anybody we buy from, this is the market to be in, but it's certainly for us to be fighting trade wars on all fronts is a little bit scary for everyone involved. And hopefully that means people will take it seriously. Other countries will come to the negotiating table and relinquish their tariffs or match our tariffs as we plan to do. Our second story is that British Petroleum, or BP, shares rise amid acquisition speculation. So BP's stock price has climbed over 3% following reports of major oil companies like Exxon and Chevron are considering a takeover. Intense interest is attributed to BP's underperformance lately and a 27% drop in shares over the past year, making it an attractive acquisition target, according to MarketWatch. Consolidation of oil companies in recent memory is probably something that we have to make sure that things don't get out of hand. We don't want one large oil company. BP is a major contributor, so it would be unfortunate to see them have to bow out of the industry. Our third story is the U.S.-China trade talks loom as tariff threats persist. So there is a tariff discussion in Switzerland this weekend. President Trump hinted at imposing an 80% tariff on Chinese imports, but indicated flexibility. Current tariffs have significantly hindered trade with China's exports to the U.S., and that those have dropped 21% in April, and markets remain volatile as negotiations approach. So that's according to Investors Business Daily. I think, again, the tariffs can be a great tool and a great equalizer for all involved on both sides to have a good outcome. That's not to say the U.S. was having a bad outcome, but we need a better outcome. And that's also, I think, true for all that we're negotiating with, especially the Chinese. They can't live without us, but it could be said that we can't live without them. We just want better terms and not to be taken advantage of to such a great extent. Things need to be balanced out, and I think that's why fair trade in the past was made. This is just making sure that the fair trade is fair trade. Ray-Ban owner warns of financial strain due to a rising labor cost. So Luxottica Group, the company that owns Ray-Ban, cautioned that increased national insurance contributions and labor costs in the UK are starting to affect its operations. The company reported a decline in turnover and profits, attributing it to inflation and a post-Brexit workforce challenge, according to the Times. Luxottica probably should be looking at automating, just as other companies are, with AI, with robots, with automation in manufacturing. All that should be making Ray-Bans affordable. But maybe Luxottica decides in some way to spin off Ray-Bans. I believe Ray-Ban was originally an American company, and I don't know that Luxottica is maybe the right choice for them, but we'll see. Our fifth story is the Expedia stock falls amid weak travel demand. So that both weak travel demand in both the U.S. and internationally. Expedia's shares have dropped by 7% after reporting lower than expected first quarter earnings. I think this is again that all-encompassing economic storm that is COVID, the post-COVID period, AI, automation, the horrible Biden administration and their efforts to just paper over the problems. It definitely also has to do with Trump and all the work that he's doing to fix things. Oftentimes when you're fixing things, it causes short-term pain, or even if done too severely, could cause the patient or the American economy to die. So it's very important to get this right, to be careful and surgical in terms of how things are done. I think the approach to get everything done that President Trump is working to do is dangerous in that it could put the U.S. economy on life support or even into a coma if we're not careful. So Expedia story comes from Barron's, and it really one of the things that is impacted by all this work to make things right, to even the playing field for trade and all other things. This has also impacted the travel market, the tourism industry. So fewer people wanting to come to the United States and fewer people in the United States able to leave and go on vacation internationally or even nationally. This impacts the hotel business, obviously rental cars, restaurants, anything involved in tourism is going to have that. So your Airbnbs, your VRBOs, your campgrounds, all of that will have less traffic, and as an impact, companies like Expedia that are booking that sort of traffic are also feeling the pinch. The Newark airport outage highlights need for tech updates. This is very important. Safety is a great concern in our airline industry. It is, however, also very difficult to do upgrades. That's why some of the gear and equipment is so old and outdated. Travel is a 24/7, 24-hour thing. You can't shut down an airport for a period of time without impacting business and people's personal lives. This is important for us to make sure that as we look to upgrade our safety and communications within the airline industry, the FAA, that we make sure that this is done with redundancy, with security and safety in mind. Microsoft Build 2025 conference to focus on AI integration. So May 19th is the Build conference for Microsoft. That's starting next week. And it's going to be the focus on AI-powered products. CEO Satya Nadella will highlight the company's efforts to integrate AI into its software and services, aiming to drive growth in the sector. So this is according to TechCrunch, many companies are looking to be AI first. What it means to be AI first is probably a question for each company. I think many companies, unfortunately, are also looking to save money in this economy, as mentioned before. And one of the easiest ways to do that is to have layoffs. And one of the easiest way to have layoffs is to have AI replace what humans are doing. So this is a big concern. I think Microsoft is nonetheless taking the right approach. Most companies will be looking to augment their employees. So what you can do at your office at your job with AI is hopefully to leverage it to, instead of having a new person come on into your group, many companies will be looking to have you double your efforts with the leverage of AI. The tech ETFs lead the market rally amid the AI earnings optimism. So again, any of the companies that are looking to be AI first are going to have a significant advantage over all the companies that aren't. So announcing that you're AI first and making moves to do AI or incorporate AI into your company and into its efforts and optimize via chatbots, via help desk, via automation of services, all of these will benefit. And any of the tech companies or companies that are on the technology ETF focused forefront are getting, because they're AI first, they're getting investments and investors are flocking to them. So good sector growth for ETFs like CRPT and DAPP show significant gains. Our ninth story is Association Technology Solutions Market Forces Skill Shortage. So there's a new report that highlights the opportunities that the Association of Technology Solutions market, driven by e-commerce and data strategies. However, there's a shortage of professionals that are able to be integrated into these programs. Emphasizes the need for workforce development in the sector, and I think that's according to Global News Service. I think it's important for companies to realize their greatest asset is their people. Their most flexible, quote unquote, AI is again their people or their workforce. Their most flexible and able to learn and develop and adapt is also their workforce. So while workforces are looking to leverage and expand what their AIs can do and take over, they also need to ensure and focus on workforce development, increasing the capabilities and skills of those that work for them already. And our 10th and last story is a cryptocurrency story. The cryptocurrency market cap surpasses $3 trillion. This is in large part to what's happening, again, also with the tariffs. Bitcoin has reached over $100,000 in value, and Ethereum surpassed $2,000. And this growth reflects investor confidence in the momentum of the crypto space. I think crypto is no longer a word that surprises people, or it's something that people don't understand. People are beginning to grasp it, beginning to treat it like gold, like an asset, like something that can be tradable and that is not necessarily tangible, but it can't be faked or replicated externally by someone nefarious. And with the better knowledge of that, I think many companies and investors will benefit from using and investing in crypto. This is not a crypto show or a crypto investment advice. I think it's good to cover your bases, just like you would with gold, for instance, in the market. So if you are in the market to take a little risk, crypto is probably a good bet. But as always, seek out your financial advisor for specific advice to you in your situation. And that's it for today's Move 37. Stay sharp, stay curious, and we'll see you tomorrow with more insights from the intersection of innovation and disruption.